down 65% in 2022. Is Meta Platforms stock a buy for 2023? I'm going to answer that question in this video, so stay tuned. The first thing I'm going to look at to answer that question is Meta Platforms revenue growth going back to 2018. And what is clearly evident from this slide is the recent downward trend of quarterly revenue growth year over year. Meta Platforms faces several headwinds in the near term, including the rise in popularity of TikTok for one. Number two, Apple's privacy policy changes have made it difficult for Meta Platforms to sell targeted advertising, and that's decreasing demand from marketers. And finally, the war in Ukraine and rising inflation is giving businesses limited visibility into their business prospects, and when businesses don't know what their sales are going to be like in the near term, they tend to reduce advertising spending until they can get more visibility. So all three of those factors are hurting Meta Platforms revenue growth in the near term. The next thing I'm going to look at is Meta Platforms cash flow from operations. And firstly, you could see a nice upward trend here all the way up until the start of 2022, and incredible billions and billions of dollars and over 15 billions of dollars in cash flow from operations from Meta Platforms. Even after their recent downward business prospects, they've still generated $9.7 billion in cash flow from operations. They run a lucrative business. It's not really expensive for them to run the business once they've reached the scale that they've reached. Remember, nearly 3 billion people log into Meta Platforms on a monthly basis. That's a lot of people that advertisers want to reach and are willing to pay in order to potentially influence their purchasing decisions, and Meta Platforms stands to benefit from that desire from marketers. The next thing I'm going to show you here is Meta Platforms earnings per share quarterly going back to 2018 is what we've been looking at. And again, nice upward trend from 2018 to the start of 22, and a downward in 2022, falling all the way to $1.64. Now, these recent metrics in terms of cash flow from operations and earnings per share are also being impacted by one other feature that I didn't highlight earlier. In addition to those three factors going on with impacting the demand for Meta Platform services, there is a factor that's hurting its profitability, which is Meta's investment into the metaverse. That's why they changed their name from Facebook to Meta Platforms. They're focusing on becoming a metaverse business, and that's costing billions of dollars in additional expenses. They already spent $10 billion in 2021, and they've indicated they're going to spend even more money going forward. And so the combination of the decreasing demand with these rising expenses is impacting earnings per share more so than it would if it was just one side of the equation that was working against Meta Platforms. However, that said, these investments in the metaverse are discretionary uh, in terms of management's perspective, right? If they see that their cash flows and their profits are really becoming pressured, they have the option to decrease and spread out these investments in the metaverse, really slow down all of that investment. They don't need to be so aggressive investing in the metaverse. And so the, I believe if Meta Platforms stock continues to be pressured to the downside, management could come out with a cost cutting plan that would provide some limit to the downward pressure on the stock price. I believe if management was to come out with an announcement and say that, all right, we're done with the metaverse, we're not investing in it as aggressively, we're cutting, let's say, 80% of our investment in the metaverse, I think the market would perceive that positively, and the stock could catch a bid and rise in response to that announcement. Now, that is speculation on my part, but much of the decline in Meta's stock price has been attributable to those aggressive investments in the metaverse with no clear payoff in sight. CEO Mark Zuckerberg has said this is a 10-year project. They don't expect to see any major benefits until 2030, and so that long-term time frame is worrisome to investors. The company is spending tens of billions of dollars now and not expecting to reap a benefit until 2030. All right, finally, I'm going to look at Meta's valuation, trading at a price to free cash flow of 12 and a forward price to earnings of 12.79. Both are near the lowest it has traded for going back into 21 for the forward PE ratio and going back all the way to 2018 for the price to free cash flow. So the stock is relatively cheap and absolutely cheap on whether you compare it to the overall market or whether you compare it to Meta Platforms history. So the stock is cheap. Now, you could argue that the it's justified to be trading at such a cheap valuation given the three headwinds to revenue and the one major expense initiative underway. You could argue that it should be trading inexpensively due to that. However, it also is an opportunity for long-term investors to enter into this company that has billions of users that log on to the service every day, right? And then on top of that, investing into the metaverse, which is going to bring some kind of return on investment. It remains to be seen what that return on investment is going to be, but it's certainly going to be greater than zero. And you have to kind of look at management here and put a little trust in what management sees as far as a market opportunity in the metaverse. It's not investing tens of billions of dollars in the metaverse unless it thinks that there's going to be a sufficient reward in line for that investment. So you got to believe that management is making that investment with the hopes of getting something in return. The first thing, all of that being considered, I would say Meta Platforms stock is a buy for 2023. Now, it is risky. It is a risky stock. You don't know how much those headwinds are going to continue bringing down revenue. You don't know if management is actually going to be prudent with their investments in the metaverse. So there's a lot of uncertainty here. I wouldn't put a significant amount of your investment into this stock, but if you are considering buying it, I would say Meta Platform stock is a buy for 2023. All right, that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.